forget about all of the noise. It's the best performing asset in all recorded history. Mm-hmm. Right? It does 140% a year returns, and that's including 3 or 4 80% drawdowns. Right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods. Much like AI was a gift from the gods. We've been given something that can unfuck your future, which is the whole thesis that I've been talking about. Mm-hmm. So do that. And so it's not about liking, it's not about the culty thing, it's not about any of it. It's like, if I've got 6 years and I want to make as much money as possible, I want to own the best risk-adjusted reward asset I can. And technology is the second one. We're still in summer. So basically, if you think late summer, the weather's pretty good. That's where we are. Somewhere in the middle of summer. So the weather's good. It's easy to make money. And this is the acceleration that happens around the US election years. And this has happened every time is what I refer to as the banana zone, where everything goes bananas. And in crypto terms, the charts just look like bananas standing on end because they just go vertical. Because
the upcoming Bitcoin bull run has the potential to be 10 times larger than the one we experienced in 2016. This could be a once-in-a-lifetime event, making the 2016 rally seem minuscule by comparison. This bold prediction comes from Real Vision CEO Raoul Pal in a recent interview. Pal emphasized that Bitcoin's impressive growth isn't just a stroke of luck. It has consistently delivered remarkable returns, averaging a 140% increase annually. In a landscape where most investments struggle to keep pace with inflation, Bitcoin shines as a revolutionary asset. Pal is confident that the next bull run will be historic, and in this video, he elaborates on his insight. Be sure to watch until the end, as Raoul Pal outlines why this upcoming bull run could be the most significant yet and shares tips on how to position yourself to fully capitalize on it.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Macro summer's when the economic machine starts firing up again. And that lends to another acceleration in markets and growth, whilst inflation tends to be falling or subdued. And that's a really lovely period because you can make money in pretty much everything. Commodities go up, gold goes up, small caps go up, crypto goes up, tech goes up, everything goes up. And that's where we are now. And so that summer period, the real footprint usually accelerates around the US election and after it. And that's when most markets have their best performance. So there is a seasonality around elections, which you tend to get strong first half of the year or first part of the year. Then it tends to be a bit more sideways, which we had in tech and we had in crypto, and where the rest of the market started playing a bit of catch up. And then you get the acceleration that goes on for the end of summer straight into macro fall, which is 2025, when really the best gains come of all. So that's where we are. So back then we were just starting. Now what happened? Crypto went on a massive tear, then had that sideways consolidation. Tech had a massive tear, had a sideways consolidation. The rest of the market's now catching up. And the next phase is the money shot. We're still in summer. So basically, if you think late summer, the weather's pretty good. That's where we are. Somewhere in the middle of summer. So the weather's good. It's easy to make money. And this is the acceleration that happens around the US election years. And this has happened every time is what I refer to as the banana zone, where everything goes bananas. And in crypto terms, the charts just look like bananas standing on end because they just go vertical. Because around the election period and the year afterwards, they all have to refinance, $10 trillion of debt. The Fed has not been able to the Treasury's not been able to refinance easily. So it's been issuing short-end bills, which is basically a holding pattern for rates to come down. Wait for rates to come down, and then you can refinance your rates. It's like you don't want to refinance your mortgage at highs. You want to refinance your mortgage at lows. So you keep your money in a money market fund, which is basically what the Fed did, and then they'll do that. So that period of massive liquidity tends to debase currency. We're seeing China coming out with the cowbell, more stimulus. The US has started the rate cut cycle. That's going to come down a lot. The EU have started. The UK have started. Everybody started. And so the big game is at play. So generally speaking, as I said, crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la land returns. I mean, but that's crypto. Crypto gives that kind of opportunity. The NASDAQ's been following this perfectly. So it just keeps going, whether we get another 20%, 50% upside in the NASDAQ, or it could be more. We don't know. You can't really tell. But the point being is the gains are huge. We'll also see commodities picking up. We'll also see, we've seen precious metals picking up. We'll see all parts of the economy and the stocks picking up as the economy's growing. Inflation's not yet a problem. And the central banks are cutting rates and adding liquidity to finance their debts. That's utopia. That's what macro summer and macro fall. It's basically market utopia. Rate cuts are actually a bit of a red herring. Liquidity really comes from central banks and governments putting money into the system. So we have something in the US called Fed net liquidity. So what is the three component parts of that state level liquidity? Well, that's driven by the Fed balance sheet, quantitative easing. They're still tightening, but they've reduced the amount of tightening. Then we have the reverse repo. And that is basically where banks mop up all of their funds. So if that's very big, money's tight. And when they start taking the money out, it goes into the banking system. The other side is the Treasury General Account, which is the checking account of the government. Now, if they've got a lot of savings and they're not spending it, which is where we are today, then conditions are tight. But once they start writing checks, what happens is that money floods into the system. And that is a kind of a net increase in money into the system. So if you make more of something and it's in abundance, its purchasing power or its value declines. So it's not that necessarily you and I get to borrow money more easily. It's not that. It's that there's more money around and it debases currency. It's like this magical thing that happens. Now, on the private sector side, the stuff like M2 growth and private sector credit growth is kind of a function of that, but they both work together because you can create dollars in a Eurodollar system. You can just create them out of thin air by being a bank. And so what happens is there is this huge increase in money that happens. But we as people don't generally get it. Sure, your mortgage rate may fall a bit, but really it's this debasement effect that happens that's more insidious that we don't see and don't really understand. Asset prices take off, but our earnings don't. So therefore, we get poorer in terms of the assets we can buy. And an asset is just future deferred consumption. If you buy gold today, your expectation is you can sell it in the future at a higher price to protect your purchasing power. But today, you can buy less gold than you could a month ago, and less gold than you could 5 years ago, and because your wages don't go up in the same as these scarce assets that move because of debasement.
After recently nearing its all-time high of over $70,000, Bitcoin's price has dipped again, partly due to an earthquake in China that has introduced uncertainty into the market. However, some analysts view this situation as potentially beneficial for Bitcoin in the long run. Analysts David Bickel and Chris Mill believe that Bitcoin could quickly hit new all-time highs, thanks to China's plans for significant stimulus measures designed to revitalize its struggling economy. They predict that these measures will inject a substantial amount of money into the market, driving up demand for assets like Bitcoin as investors look for opportunities in the cryptocurrency space amid broader economic shift. Do you agree with this outlook? Share your thoughts in the comments. Now, let's return to Raoul Pal as he continues his discussion.
There's a large group of people who want their justice. They want the system to fall apart, to say, I told you so. You're printing money, you're creating inflation, you're doing this, it's all unsustainable. And they don't want to see that what's actually happening, this 8% debasement, is basically all of us being charged 8% for a put option on the system, which is actually maybe not that bad. But they don't want to see it. And then a lot of people who aren't invested in technology can't stand the fact that it outperforms versus what was deemed to be the right way to invest, which was the value investor, the cyclical commodity, deep value, that thing. And that's not been working for 30 years. But yet they want it to come back. So they get more angry as markets go, and then they start drawing patterns about how it's going to crash. Well, markets, unlikely to crash unless it's further out the risk curve. But markets don't crash when the business cycle's picking up. They crash when the business cycle is slowing down, and let's say the ISM crosses 50. It never happens at this point of the cycle. So really, there's no real rational argument. And the Fed are cutting rates now. They're pushing liquidity into the system. The market's buoyant, and the ISM is going to start picking up. All the forward-looking indicators are. So it's really difficult to argue that there's a bubble and it's going to pop. And when we get to the bubble argument, something else they miss is they look at price earnings and they say, see, price earnings keep going up there. It's getting wildly expensive. But price and earnings, if you remember the story of your earnings and house prices are always going up more than your earnings. Well, what is price earnings? It's the share price, which is driven by debasement, and corporate earnings, which are driven by GDP growth. So over time, as we add liquidity into the system, the everything code suggests that price earnings will keep going higher because of this dynamic, but people don't understand it. So they look to a world of the past. Now, this has actually all been done before. This is not a brand new thing. After World War II, this is what they did. They used yield curve control as a way of stimulating the economy, and they essentially grew their way out of it by refinancing the debts. And we had exactly the same 4-year cycle back from about 1948 to about 1968. So we had 20 years of it back then. Listen, there's one asset to own here, and it's Bitcoin. Forget about forget about all of the noise. It's the best performing asset in all recorded history. Mm-hmm. Right? It does 140% a year returns, and that's including 3 or 4 80% drawdowns. Right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods. Much like AI was a gift from the gods. We've been given something that can unfuck your future, which is the whole thesis that I've been talking about. Mm-hmm. So do that. And so it's not about liking, it's not about the culty thing, it's not about any of it. It's like, if I've got 6 years and I want to make as much money as possible, I want to own the best risk-adjusted reward asset I can. And technology is the second one. Granted back gold, because he's a gold person, and it wasn't a debate. It was just like he was saying, listen, you should use gold. And I said, well, I think Bitcoin's the answer. And look what happened. That was the 10 years. And over the 10 years of Real Vision has been all of the greatest minds grappling with understanding this stuff.
As Raoul Pal noted, the crypto market is entering what he calls the banana zone, similar to how a banana reaches its peak ripeness. In favorable market conditions, cryptocurrencies can see significant price surges. Historical trends indicate that markets often perform well in the months leading up to U.S. elections, suggesting that Bitcoin is likely to follow this pattern in the upcoming electoral cycle. With the Federal Reserve actively working to maintain stability in the financial system, concerns about drastic declines in asset prices have eased for the time being. This creates an opportune moment for investors to keep an eye out for substantial price increases, particularly in the crypto space. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.